Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm going to start the next problem on ratio analysis, that is problem number 10. Till the last video I have completed 9 short problems on ratio analysis. So if you have watched those 9 problems, definitely you got the idea about how to solve the problem on ratio analysis. So many formulas we have applied. I told you again. So this chapter ratio analysis depends on the formula. Number of formulas are there regarding liquidity formulas, leverage and capital structure, activity and turnover ratios, and lastly profitability ratios. All these formulas I have explained in the first 3 videos regarding the theory of ratio analysis. I have explained you in detail each and every formula. So if you remember those formulas, then definitely you can be able to understand this. So I suggest you, before watching this video, you must be completely acquainted with all the formulas of ratio analysis. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject financial statement analysis, select the topic ratio analysis, watch the first 3 videos, be perfect regarding the formulas, then come to this video. Now I'm going to start the 10th problem, but before that you must have the printout of the problems which I have given in the link under my description. So take a printout ready and start watching this video. Now 10th problem I am reading out. Given that the cost of goods sold 2,80,000, COGS, cost of goods sold 2,80,000, operating expenses 4 lakh, net sales are 13,60,000. Calculate the operating ratio. So first time we are applying the formula for operating ratio. So operating ratio is equal to cost of goods sold plus operating expenses divided by net sales into 100. So this operating ratio formula will come under profitability ratios, general profitability ratios. So what is the formula for operating ratio? COGS plus operating expenses divided by net sales into 100. So in the problem COGS is given. See here, cost of goods sold is 2,80,000 given. Then operating expense are 4 lakh given. Net sales 13,60,000. Operating ratio is equal to how much? So operating ratio COGS plus operating expense by net sales into 100. Substitute the values. 2,80,000 plus 4 lakh divided by 13,60,000 into 100. You will get 50%. So we got operating ratio 50%. First 10th problem completed. Now 11th problem you see. With the following particulars, find out the gross profit ratio, GP ratio, net profit ratio, NP ratio, and comment on them. Sales rupees 100 crores, cost of goods sold rupees 50 crores, and other expenses rupees 25 crore. So we are given sales, cost of goods sold, and other expenses. See carefully. Sales are 100 crores. Cost of goods sold 50 crores, other expenses 25 crores. Now gross profit, the formula for gross profit is sales minus COGS. In the previous problems also we have applied this formula. So COGS, that means gross profit is equal to sales minus COGS. So sales are given 100 crores and cost of goods sold 50 crores. So 100 minus 50, 50 crore is the GP. Gross profit we got. Now we need net profit. Net profit is equal to gross profit minus other expenses. All other expenses we deduct. So gross profit 50 crore, 50 minus 25, 25 crore is the net profit. Now we got gross profit, we got net profit. Easily we can find out GP ratio and NP ratio. Gross profit ratio. Gross profit by net sales into 100. Gross profit 50. Net sales 100 into 100. 50% is the GP ratio. Gross profit ratio 50%. Net profit ratio is equal to NP by net sales into 100. So net profit is 25 crore, already we have calculated. Divided by sales 100 into 100, 25%. So these 2 ratios it is asking you to calculate GP ratio and NP ratio. So from this data we can say that the GP ratio and NP ratio are very high. It's a better indication that the profitability is very good for the company. 50% GP ratio means for every 100 rupees of sales, we are getting 50 rupees gross profit. The cost of production is only 50%. So GP ratio of 50% is quite high. It's better. Net profit ratio. From gross profit we deduct all other expenses to get the net profit. So our net profit is also 25%. It's very good. So this GP ratio of 50% and NP ratio 25% shows that the profitability of the business is very good. Next, problem number 12. From the details given below, compute return on capital employed, return on total assets, and return on equity shareholders funds. The three ratios it is asking you to calculate. All the three are overall profitability ratios. Overall profitability ratios. So what is the information given? Net worth, shareholders equity. Net worth means the total of all shareholders funds. Equity share capital, preference share capital, reserves and surplus. If we add up all, that is shareholders equity, that is the net worth. Now preference share capital is 2 lakh. Preference share dividend is 16,000. Capital employed 11 lakh. Intangible asset for 1,40,000. Total assets 12,65,000. Net profit after taxes, that is PAT, profit after taxes, 1,50,000, and interest 23,500. So this is the data given, and we are required to calculate three ratios, overall profitability ratios. What is the first overall profitability ratios? Return on capital employed. It is also called return on investment. ROCE, return on capital employed, or ROI, return on investment, means same. So what is the formula for ROCE, return on capital employed? PBIT divided by capital employed into 100. Ultimately, every problem depends on the formula. So you have to take the pain in remembering the formula. If you remember the formula, definitely the full control of the problems will be in your hands. So take a little bit pain of remembering all the formulas which I have specified in first 3 videos. So return on capital employed, ROCE. So PBIT divided by capital employed into 100. Capital employed is given in the problem, but PBIT is not given. We have to find out PBIT. In the previous problem, I have given the formula for PBIT. PBIT is equal to PAT plus interest plus tax. PAT plus interest plus tax. You will get PBIT. So here, PBIT. First of all, ROC, PBIT divided by capital employed into 100. This is the formula. PBIT is equal to PAT plus interest plus tax. In the problem, PAT is given 1,50,000. Interest is given 23,500. But tax is not at all given. In the problem, tax is not given. So add up 1,73,500 is the PBIT. Now ROC is equal to 1,73,500 PBIT. Capital employed 11 lakh rupees given in the problem, directly given. So 15.77% is the ROCE, return on capital employed. Finished. Second ratio, return on total assets, ROTA. So return on total assets, the formula is PAT divided by total assets into 100. Profit after tax divided by total assets into 100. The profit after tax 1,50,000 given. Total assets is also given in the problem, 12,65,000 into 100. 11.86 is the ROTA, return on total assets. Last is return on equity shareholders fund. Return on equity shareholders fund. Return on net worth. So return on equity shareholders fund. The formula is PAT minus preference dividend. PAT minus preference dividend divided by equity shareholders fund. Only equity shareholders fund we require. We don't require net worth, because in net worth preference share capital will also be included. When we say net worth includes equity as well as preference. Equity as well as preference, but we don't require preference. So from the net worth deduct the preference share capital. Here PAT minus preference divided by equity shareholders fund. So equity shareholders fund is equal to net worth minus preference share capital. From net worth deduct the preference share capital, we will get equity shareholders fund. So 7,50,000 minus 2 lakh. 7,50,000 is the net worth given in the problem. and equity preference share capital is given 2 lakh. So 7,50,000 minus 2 lakh, 5,50,000 is equity shareholders fund. Now we substitute. Return on equity shareholders fund is equal to PAT 1,50,000 minus preference dividend 16,000 divided by equity shareholders fund 5,50,000. So 1,50,000 minus 16,000, 1,34,000 divided by 5,50,000 into 100. 24.36 the return on equity shareholders fund. That's it. So this is the end of problem number 12. Now I am reading out problem number 13. The working capital of a firm is 80,000. First time we are coming across the concept of working capital. Working capital is the difference between current asset and current liability. CA minus CL is equal to working capital, net working capital. Here working capital is given 80,000 and its current ratio is 5. Previous problem we have applied the formula for current ratio. CA by CL, current asset by current liability, that is given 5. What are the current assets and current liabilities? How much is CA? How much is CL? That's one. Here you can see working capital 80,000 given, current ratio 5 given. We have to find out CA, CL, right? Now working capital, how much is given in the problem? 80,000. The working capital 80,000. What is the formula for working capital? CA minus CL. So CA minus CL is equal to 80,000. Now I am keeping CA on LHS. Left hand side I am keeping CA and taking the CL to the RHS. So minus CL will become plus CL. So we got an equation, current asset is equal to 80,000 plus current liability from this working capital. By using this working capital, we come to know that current asset are 80,000 plus current liability. One equation we got. Keep it aside. Now current ratio. Current ratio is 5 given in the problem. In place of current ratio, I can write the formula CA by CL. So CA by CL is equal to 5. Now numerator is CA. So in place of CA, I will write down 80,000 plus CL because equation we are having CA is equal to 80,000 plus CL. So in place of CA, 80,000 plus CL divided by CL is equal to 5. Now I am making a cross multiplication. So 5 into CL is 5CL. 80,000 plus CL into 1 is 80,000 plus CL. Cross multiplication. Now bring the CL from RHS to LHS. So this plus CL will become minus CL is equal to 80,000. So 5CL minus 1CL. CL means 1CL. So 5CL minus 1CL, 4CL. 4CL is equal to 80,000. CL is equal to 80,000 by 4, 20,000. Come on. We got the value of current liabilities. CL. How much? 20,000. Now we need the current asset. What is the equation of current asset? Already we have written. Current asset is equal to 80,000 plus CL. CL we got 20,000. So 80,000 plus 20,000, 1 lakh over. We got the current asset 1 lakh and current liability 20,000. Now we can check whether our answer is correct or not. CA minus CL is equal to working capital. CA minus CL is equal to working capital. A 1 lakh minus 20,000 is 80,000. Do we have 80,000 working capital or not? Yes, working capital 80,000. That means our calculations are correct. Over. So 13th problem completed. Now I am coming to the 14th one. Given that current ratio is 1.75, liquid ratio is 1.25. Liquid ratio means quick ratio. Liquid ratio means quick ratio. So we are given current ratio 1.75, quick ratio 1.25. Net working capital 1,50,000, just like the previous problem. Net working capital 1,50,000. Calculate current assets, current liability, liquid assets and stock. 4 items we have to calculate. Current asset, current liability, liquid asset. Liquid asset means quick assets. And last one, stock. Easily, very easily we can find out. Current asset, current ratio 1.75, quick ratio 1.25. Liquid ratio means quick ratio 1.25. Net working capital 1,50,000. Current asset we have to find out. Current liability we have to find out. Liquid assets or quick assets we have to find out. Stock we have to find out. Again, we'll start in the same way what we have done in the previous problem. So working capital is 1,50,000. So what is the formula for working capital? CA minus CL. So CA minus CL is equal to 1,50,000 take this CL to RHS. So minus CL will become plus CL. So current asset is equal to 1,50,000 plus CL. One equation we got. Keep it aside. Now current ratio. The current ratio is given 1.75. What is the formula for current ratio? CA by CL is equal to 1.75. Now in place of CA, I am substituting 1,50,000 plus CL. Divide by CL is equal to 1.75. Now I am making cross multiplication. Just like the previous problem. Just like the previous problem. So here 1.75 into CL is 1.75 CL. 1,50,000 plus CL into 1 is 1,50,000 plus CL. Now bring CL from RHS to LHS. It will become minus CL. Plus CL will become minus. So 1.75 CL minus CL is equal to 1,50,000. CL means 1 CL. CL means 1 CL. So 1.75 minus 1. 1.75 minus 1 is 0.75. So 0.75 CL is equal to 1,50,000. CL is equal to 1,50,000 by 0.75. 2 lakh. So current liability we got 2 lakh. One answer we got. Current liability we got. Now easily we can get current asset. So current asset is equal to 1,50,000 plus CL. Already we got the equation here. So in place of CL I am writing 2 lakh. So 1,50,000 plus 2 lakh. 3,50,000 is the current asset. So two values we got. Current asset 3,50,000, current liability 2 lakh. Now we have to find out the liquid assets, quick asset. The quick ratio is 1.25 given in the problem. Now what is the formula for quick ratio? Quick asset by current liability. So QA by CL. QA we don't have, but CL already we have calculated 2 lakh. So QA by 2 lakh is equal to 1.25. Now we'll make a cross multiplication. So QA is equal to 2 lakh into 1.25, 2,50,000. So QA, quick asset or liquid asset is 2,50,000. Third answer completed. Last answer we want the stock. Stock. So what is the formula for quick asset? Quick asset is equal to current asset minus stock minus prepaid expenses. Already in the previous problems also we have applied. QA, quick asset, is equal to current asset minus stock minus prepaid expenses. Suppose there are no prepaid expenses. Supposing there are no prepaid expenses, then QA is equal to CA minus stock. QA is equal to CA minus stock. Bring the stock to QA. QA already we have now. How much is the QA? 2,50,000. So in place of QA I am writing 2,50,000. How much is CA? 3,50,000. In place of CA 3,50,000 minus stock. Now bring the stock to LHS. So this minus stock will become plus stock. Take this 2,50,000 to RHS. So this plus 2,50,000 will become minus 2,50,000. So 3,50,000 minus 2,50,000, 1 lakh rupees is the stock. That's all. Completed. All the 4 items. Current asset, current liability, quick asset, liquid assets and stock. All the 4 items we have completed. Now next problem is 15th. See the 15th. If Apple Company Limited's current ratio is 5.5 is to 1. So current ratio 5.5 is to 1. Or if we do not write is to 1, that is okay. Only 5.5 is the current ratio. And quick ratio is 4 to 1. That means 4 is to 1. Or simply we can say 4. In simple words we can say current ratio is 5.5 and quick ratio is 4. Inventory means stock. Stock is 30,000. What are the current liabilities? We have to find out CL. Current ratio is 5.5 is to 1. Quick ratio is 4 is to 1. Inventory stock 30,000 rupees. Current liability how much? This is the problem. Now current ratio minus quick ratio. I am subtracting. I am finding out the difference between current ratio and quick ratio. So current ratio minus quick ratio is equal to, what is the current ratio? 5.5. What is the quick ratio? 4. So 5.5 minus 4 is 1.5. 5.5 minus 4 is 1.5. What is the formula for current ratio? CA by CL minus formula for quick ratio? QA by CL. Now if you take the LCM, the LCM is CL. Here also CL, here also CL. Denominator CL. So LCM CL. So CA minus QA. Numerator will be Current asset minus quick asset divided by CL is equal to 1.5. Now remember, CA minus QA is nothing but stock. Current asset minus quick asset is nothing but stock. This I have explained you in note. Note, QA, quick asset is equal to current asset minus stock. Quick asset is equal to current asset minus stock. So if we bring the stock to LHS, the minus stock will become plus stock. Take this QA to RHS, so minus QA will, plus QA will become minus QA. So stock is equal to CA minus QA. So remember this formula. Current asset minus quick asset is nothing but stock. So here also we got CA minus QA. I am writing stock by CL is equal to 1.5. Stock is given in the problem. Inventory 30,000. So 30,000 by CL is equal to 1.5. Now I am making a cross multiplication here. So 1.5 CL. 1.5 into CL is 1.5 CL. 30,000 into 1 is 30,000. So CL is equal to 30,000 divided by 1.5. So current liability will be 20,000. That's it. So we have completed 15 short problems on ratio analysis. I have explained you in detail each and every point, the formula. I am applying so much of effort simply to make you satisfied. For your benefit, I am providing all these videos. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. I'll continue the next problem in the next video.